The $10 dream is a siren song for millions, yet the cold, hard reality of a 589 trillion token supply remains the ultimate barrier. Today we dive deep into the heart of the matter. Can the Shibarium burn system, the community's greatest hope, truly close this monumental gap and propel Shiba Inu into a new era of scarcity? Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. The narrative surrounding Shiba Inu has always been one of immense potential, clashing with an equally immense supply. When the token was first launched, its creator, Ryoshi, intentionally left a vast supply in circulation, a move that created both its viral accessibility and its greatest long-term challenge. The sheer volume of tokens, approximately 589 trillion, means that even a tiny price increase requires trillions of dollars in market capitalization, making the aspirational targets like 1 cent or, indeed, $10 seem mathematically impossible under current conditions. This fundamental tokenomic reality is precisely why the development of a robust burn mechanism became the single most critical factor for the project's future. The community and developers understood that utility alone would not suffice. A systematic reduction in supply was mandatory. This led to the creation of Shibarium, the Layer 2 blockchain. Shibarium was not just designed to provide faster, cheaper transactions. Its core economic function is to generate transaction fees, a portion of which is permanently removed from the circulating supply, or burned. This mechanism is the project's direct answer to the 589 trillion token reality, positioning the Layer 2 network as the engine of deflation. Analysts note that without a consistently aggressive burn rate, the token's price ceiling remains severely limited, regardless of market sentiment. The most recent and significant development centers on the dramatic volatility in the Shibarium burn rate throughout October and November 25. According to reports from the Shib burn tracker, the ecosystem has seen several massive isolated burn events that have temporarily sent the daily burn rate soaring by thousands of %. For example, on November 20th, 25, a single transaction was responsible for a burn rate spike of over 23,864%. removing 16.7 million Shiba Inu from the supply. This was followed by another significant spike on November 15, 2025, where the weekly burn rate rose by 2,405%, driven by the removal of over 812 million tokens. These dramatic, short-lived spikes are a direct result of increased activity on the Shibarium network, particularly large-scale transfers, or the use of specific decentralized applications, DApps, that integrate the burn function. However, sources suggest that the sustained baseline burn rate from organic network usage remains modest. This creates a narrative of feast or famine, where the market is constantly watching for the next major catalyst, a new DApp launch, a major corporate partnership, or a large whale transaction to trigger the next massive burn. The key update is the shift in the burn mechanism's profile, less about slow, steady attrition and more about high-impact intermittent events that capture market attention. The market's reaction to these volatile burn events has been complex and often counterintuitive. As per on-chain data, the price of Shiba Inu has shown a muted response to the burn spikes, leading to frustration among some investors. For instance, despite the massive 23,864% burn rate surge in late November, the token's price only saw a marginal, short-lived increase before consolidating. Today, December 6, 25, Shiba Inu is trading at approximately 804 units, with a 24-hour trading volume of $132 million. The market cap stands at over $4.9 billion. Analysts note that this disconnect, a soaring burn rate with a stagnant price, is a function of the token's vast supply. While 16 million or even 800 million tokens burned sounds significant, it represents an infinitesimally small fraction of the 589 trillion total supply. The market is effectively pricing in the current reality, not the potential future. The price action suggests that investors require a sustained, multi-week or multi-month period of aggressive, consistent burning before they factor it into a long-term price revaluation. The current price is a reflection of the market's skepticism that the burn mechanism can overcome the supply overhang in the short to medium term. A deeper dive into the on-chain data confirms the challenge. Community trackers show that the total number of Shiba Inu tokens burned since inception is still less than 50% of the initial supply, and the rate of burning required to significantly impact the price remains astronomical. The Shibarium network, while functional, is not yet generating the volume of transactions necessary for a truly deflationary effect. The technical evidence is clear. The average daily burn from Shibarium's base transactions is in the low millions, a figure that is easily overshadowed by daily trading volume. However, the potential for change is embedded in the network's design. The recent spikes, while intermittent, demonstrate the capacity of the system. According to reports, the gas fees on Shibarium are paid in bone, which is then used to buy Shiba Inu and send it to a dead wallet. The more utility, the more transactions, and the higher the burn. The technical challenge is scaling the utility, getting more users and dApps onto the layer 2, to transform the burn from a sporadic event into a constant, powerful force. The current market cap of over $4.9 billion, combined with the 24-hour volume of $132 million, shows a healthy but not explosive level of interest, which directly limits the burn rate. Expert commentary suggests that the market is currently in a phase of burn fatigue, where the novelty of a high burn rate has worn off, and the focus has shifted to the sustainability of the mechanism. Analysts note that for Shiba Inu to realistically target a price of 10,000 units, the circulating supply would need to be reduced by at least 90%. This implies burning hundreds of trillions of tokens. The implication is that Shibarium must evolve beyond its current state. Sources suggest that the developers are focused on integrating more utility-generating projects, such as the metaverse and the decentralized identity system, which will create a constant demand for transactions and, consequently, a constant burn. The analysis is that the price will not move significantly until the market sees a clear, predictable path to burning at least 10 trillion tokens per year. The current sporadic burns, while good for headlines, do not fundamentally alter the long-term supply-demand equation. The key implication is that the tender dream is not a price target, but a tokenomic target. It requires a near-total supply destruction, a feat that will take years, even decades, at the current pace. The Shiba Inu community, often referred to as the Shib Army, remains fiercely loyal and optimistic, viewing the recent burn spikes as proof of concept. Social media and forums are filled with discussions about the potential of Shibarium to flip the switch on the supply. Developer hints, often cryptic, suggest that the team is aware of the community's desire for a higher, more consistent burn rate. However, community trackers show a growing impatience with the slow pace. The narrative has shifted from celebrating the launch of Shibarium to demanding measurable, sustained results. The developers have consistently emphasized that the burn is a function of utility, not a manually controlled lever. This is a crucial distinction. The developer team's reaction has been to focus on building the ecosystem. The Shibarium L2, the Shib, the Metaverse project, and the Treat token, all of which are designed to feed the burn mechanism organically. Their message is clear. The burn rate will follow the utility, and the community's focus should be on adopting and using the ecosystem's products. The short-term forecast, 1 week, 1 month, for Shiba Inu is one of consolidation, with a high degree of volatility tied to any new Shibarium utility announcement or a major whale movement. Technical analysts predict the price will likely trade within a tight range, perhaps between 750 units and 950 units, unless a massive, multi-billion-dollar capital injection occurs. The market is waiting for a clear signal. The long-term forecast, 3 months, 3 years, is far more bullish, but entirely dependent on the success of the burn mechanism. Analysts suggest that if Shibarium can achieve a consistent burn rate of 100 billion tokens per month, a significant increase from current levels, the price could realistically target 2,000 units to 3,000 units within the next 18 months. The $10 dream, however, remains a multi-decade aspiration, requiring a supply reduction that fundamentally changes the token's economic structure. What to watch? The monthly burn report from Shibarium, the launch of major dApps on Shibarium, and any news regarding corporate adoption of the Layer 2 network. A balanced opinion requires acknowledging both the revolutionary potential of Shibarium and the immense risk posed by the token's supply. The cautionary points are clear. The current burn rate is insufficient, and the price is not reacting to the sporadic spikes. The risk is that the utility of Shibarium fails to scale, leading to a permanent state of low burn and a price ceiling that frustrates long-term holders. However, the neutral insights are equally compelling. The Shiba Inu ecosystem is one of the most actively developed in the crypto space. The commitment to a Layer 2 solution and a deflationary mechanism is a sign of long-term vision. The potential for a network effect, where one successful dApp attracts another, creating a virtuous cycle of utility and burn, is the primary bullish case. The key is to view Shiba Inu not as a meme coin, but as a long-term, high-risk, high-reward technological experiment in tokenomic engineering. Investors must be prepared for a multi-year timeline for the burn to have a meaningful impact. So, there you have it. The battle between the 10 Dream and the 589 trillion token reality is far from over. Shibarium is the weapon, but the war for scarcity is a marathon, not a sprint. The data is clear. We need more utility, more transactions, and more consistent burning to close that gap. Keep your eyes on the monthly burn reports and the new dApps launching on the Layer 2. Until next time, stay safe, stay informed, and remember, the future of Shiba Inu is being burned, one transaction at a time. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.